Hello friends, welcome to Laws and Scriptures 360. So in today's video, we're going to continue from where we left off the last time. Remember in my previous video, that's the first video where we started talking about the new Nigerian tax laws that were enacted this year, June this year, and would take effect by January 2026. I mentioned that I will handle this topic in series because of the volume of what is going to be discussed. The volume of what will be discussed cannot be accommodated in one video, in a single video. So that's why I said I'm going to handle this topic in series. So in today's video, we're going to continue. Last time we mentioned the 4 basic laws and started with the Nigerian Tax Act. And I gave my reasons for actually picking the Nigerian Tax Act first to discuss, because the act actually unified in a single document some of the single tax laws that were sort of littered about and quite difficult to assess. So this Nigerian Tax Act kind of unified them in a single statute. So I also mentioned in the last video that some of these laws I'm talking about are the Personal Income Tax Act, the Companies Income Tax Act, the Value Added Tax Act, Stamp Duties Act, Capital Gains Tax Act, and the rest. So I know in my last video under the Nigerian Tax Act, we started off with the Companies Income Tax Act, and today we'll continue with the Capital Gains Tax Act and the Personal Income Tax Act, and then Value Added Tax Act. We'll just wrap up this particular act in today's video. So if you've not seen the previous video, I think you should go back there and watch that video so that you follow up on what we're going to be discussing today. And then the bonus in today's video is that at the end of this video, I'll be teaching you how to personally, in the comfort of your home, generate your own personal TIN, tax identification number. So if you're seeing this video and you are yet to subscribe, please, I urge you to subscribe to my channel. You would learn a lot, you would benefit, and you won't regret your decision. I assure you of that. So let's get right into it. So we're going to talk about the Capital Gains Tax Act. The Capital Gains Tax Act applies to disposal of digital and virtual assets. When we talk about digital and virtual assets, we are talking about crypto assets like cryptocurrencies, tokens, NFTs, that's non-fungible non-fungible um non-fungible token, and the rest. Before now, incomes generated from digital assets were not taxable, but under these new tax laws, that's the under these new tax laws, income that is generated from digital assets like cryptocurrencies, tokens, and the rest will now become taxable. They will now become taxable. Remember in my last video on this topic, I mentioned the people who would be either directly or indirectly affected by these tax laws, that if you are abroad and maybe you're a Nigerian actually and you're living abroad and you just feel that it's not necessary to know, I mean, it doesn't concern me, it's not necessary to get acquainted with these things, I think you should actually have a rethink, because if you have some digital assets like cryptocurrencies and the rest, the more income you generate from these digital assets, the more taxes you pay. You'll be taxed on them right now. They are no longer exempted from tax. So that's that for the capital gains tax. Now for the personal income tax. Personal income tax are taxes that are taxes that are paid on your personal income. Now, don't get me wrong. I hear people asking. I hear people asking that will their monies in the bank now be taxed? There's their balances, or the monies they deposited in the bank now be taxed under personal income tax. Please, nobody is going to tax you on the monies that you deposited in your account. So please just rule that thought out of your mind. Now, when we talk about personal income tax, we are talking about like salaries, monies, income that is earned. The income that you earn are called personal income, like your salaries. Now I'm going to explain this. If you have an enterprise, that's your business is registered as a business name, not as a limited liability company. If your business is registered as a business name, now you're going to be taxed on your personal income, because because of the because of the status of a business name under the Companies and Allied Matters Act. Now, under the Companies and Allied Matters Act, that's CAMA, a business name is not distinct from its owner. The owner is the business. That's what I mean. Let me just explain it in literal term. The owner is the business. That's if you have, when I mean business name, I mean an enterprise. That's the difference between registering a business name and registering a limited liability company. In the case of a limited liability company, the company is distinct from its shareholders, its directors, its owners. So the company is now taxed turnover on its turnover, just like I discussed all these things about um companies income tax in my last video, so you should go back and see my last video so that you follow up on this. But I'm trying to emphasize on the personal income tax now. But in the case of an enterprise, if you have an enterprise, you will be taxed based on the income you generate from that your business, from that your enterprise. You'll be taxed on it under the personal income tax, not under the company's income tax, like I talked about the last time, where we talked about if your turnover is either more or less than 50 million naira. That rule does not apply to you if you have a business name, because you'll be taxed on under the personal income tax, because you are not different from your enterprise or your business, or what you people call what people call enterprise. You're not different, you're not distinct. So you'll be taxed based on the income that you generate from your enterprise under the personal income tax. Now, this personal income tax introduces a progressive and realistic personal income tax regime. That's under this new Nigerian Tax Act now. The personal income tax now introduces a very clear personal income tax regime where individuals who earn 800,000 naira or less annually, like people who earn the minimum wage or people who earn 800,000 naira annually, they are now fully exempted from paying tax. Now, if the income you generate, I'm now talking to business name owners, if the income you generate from your enterprise is less or just 800,000 naira annually, you will be exempted from paying tax under the personal income tax. You'll be fully exempted. Now, there's also another bonus under this personal income tax, and that is the fact that a 20% rent deduction that is capped at 500,000 naira is introduced to ease the cost of housing for employees and low income earners. Now, peradventure you work in an organization that pays you housing allowance. This law is saying that if your housing allowance is either 500,000 naira or less, you will be exempted. That income would not be taxed. That particular rent will not be taxed. So you just take it as it is. That's what this new law on personal income is actually, this is what it provides. Now, the essence is actually to ease the cost of housing for employees and low income earners. However, generally, the personal income tax rate under this act is not more than 25%. So the percentage for assessing your personal income, depending on what you earn, is not more than 25,000 naira. I'm sure we understand to this point. Now, I'm going to talk about the value added tax. Not much was actually changed under the value added tax. It's still 7.5%. What you call VAT is still 7.5% for the value added tax. The rate remains the same. However, the scope and mechanism of deduction was revised. The rate was left untouched, but the scope and the mechanism of deduction or deducting was revised. Now, all taxable supplies of goods and services connected to Nigeria are now chargeable. Secondly, non-resident supplies are now required to register and remit VAT. This now brings e-commerce and digital services under this value added tax. Before now, e-commerce, that's non-resident supplies, were not taxable. Digital services were not taxable. So, but under these new laws now, if you offer digital services, you know what I mean by digital services, online service and the rest. If you offer digital services and you generate income from it, that income will be taxable under VAT. And if you now do e-commerce rather, that's non-resident supplies. Excuse me. If you now do e-commerce, that's non-resident supplies, you generate income therefrom, that income will be taxable under VAT. Remember, the rate is 7.5%. Now, there are actually some goods and services under VAT that is exempted from tax. These goods and services are baby products, now enjoy VAT exemption if you render services in this regard, or you sell baby products, or you buy baby products. These products or these services are now exempted from tax. Agricultural products and equipment are now exempted from tax. Educational materials, electricity, medical services, tuition and all educational levels are now exempted from tax. Goods and services and electrical vehicle parts are now exempted from tax. Exported goods and services and electrical vehicles are now exempted from electrical vehicle, including their parts, are now exempted from tax under VAT. Now, let's talk about the fossil fuel surcharge that would now take effect from January 2026. This is a latest development under the Nigerian Tax Act 2025. The law provides that a 5% surcharge is now introduced on chargeable fossil fuel products, excluding CNG, LPGs, and household kerosene. So it then means that if you go to buy any of these fossil fuel products, you will be charged 5% on the amount that you buy. This is the provision under this Nigerian Tax Act. Now let's look at the tax incentives and reliefs introduced under this new Nigerian Tax Act. What are the tax incentives and reliefs? The act introduced some tax incentives and reliefs for some organizations to support national development and objectives, e.g. charitable, educational and agricultural institutions, provided their income is not derived from trade or business. Furthermore, manufacturing, mining, renewable energy and agro-processing are eligible businesses to receive a 5% credit for qualifying capital expenditure over 5 years. So these are the tax incentives and reliefs. Now, from my last video, I got some questions, and I'm also sure that I would also get some questions from this particular video. And I now decided to make another video where I would ask those questions and give answers to those questions. So if you have questions, or you have any issue that is giving you concern about these laws, I think you should just drop it in the comment section, and hopefully in my next video I would sort them out. Now, how to generate your TIN, that's tax identification number, because for personal income tax payment you would need your tax identification number. Remember, your tax identification number is not required for depositing money in your account or making withdrawals from your account. Please take note. This is for personal income tax payment, just as I explained when I was explaining the personal income tax, especially for business name owners. Even though the business name would have a TIN number, rather, a TIN, that's tax identification number, you as an individual would need to have your own personal TIN. In fact, every Nigerian is required to have their TIN, that's tax identification number. So this is how to generate it. You go to your app store or your Play Store, depending on the phone that you are using, and download the JTB app. the Joint Tax Board app. When you download the app and you open it, you would see individual tax registration. You click on it and fill the required forms. I know that part of the information that you'll be required to provide is your email address. That's because that is where they will send your TIN, that's your tax identification number. So when you fill, you submit, make sure you submit successfully, and then you wait. I think it's within 24 hours that they will send your TIN to your mail, and then you would either print it out or save it for future reference or for future use. So this ends today's video. I want to appreciate you all for your time and thank you very much for having me. Enjoy the rest of your day.